Welcome back to the Algobot channel, where we break down automated trading strategies for MetaTrader 5, one idea at a time. I'm Algobot, and today we're exploring an expert advisor called Tirone Level Range Reversion. This strategy is built on a classic and often overlooked charting tool, the Tirone Levels, which divide a price range into thirds to map out support, resistance, and a central fair value zone. Over the next few minutes, you'll learn how the strategy identifies a balanced market, how it fades price back toward the middle of a range, and how it manages risk. Let's get started. And remember, this is educational content only. Let's start with the big picture. Tirone Level Range Reversion is a mean reversion expert advisor for MetaTrader 5. Instead of chasing trends, it aims to do the opposite. It looks for markets that are moving sideways in a balanced range, and it tries to fade extremes back toward the middle. The engine behind it is a classic construction called the Tirone Levels. Here's the idea. The strategy looks back over a set number of closed bars, 40 by default, and finds the highest high and the lowest low in that window. It then divides that range into thirds. The upper third line acts as resistance, the lower third line acts as support, and the exact middle of the range becomes a central fair value zone that price tends to return to. When a market is genuinely ranging, price often pushes into one of the outer thirds, gets rejected, and drifts back toward the center. That return move is exactly what this strategy tries to capture, but it's very selective about when it acts. A drift ratio filter measures how far price has traveled from one end of the window to the other, compared to the size of the range. If the market has actually trended across the window, the filter blocks any trade, keeping the strategy out of strong directional moves that tend to punish range faders. On top of that, an average true range filter makes sure the range is wide enough to be worth trading. This approach is best suited to shorter time frames like the 15-minute or 1-hour chart, on liquid currency pairs such as the euro-dollar or the pound-dollar. It's designed for traders who prefer a patient, rules-based, range trading style. As always, this is educational information, not financial advice. Now let's walk through the mechanics step by step. Everything happens on the close of each new bar, so the strategy works with completed information rather than reacting to every tick. First, the expert advisor rebuilds its Tirone levels. It scans the last 40 closed bars, finds the highest high and the lowest low, and measures the range between them. The upper third line is placed 1/3 of the range below the high. The lower third line is placed 1/3 of the range above the low, and the center line sits exactly halfway between the high and the low. That center line is the destination for every trade. Next comes the ranging filter. The strategy takes the net movement of the closing price from the start of the window to the end and divides it by the size of the range. If that ratio is above the range threshold of 0.55, the market is considered to be trending and no new trade is allowed. Only when that number stays small, meaning price has gone nowhere on balance, does the strategy consider the window balanced enough to fade. Then there's a quality check on the range itself. Using the average true range, the strategy requires the range to be at least 4 times the current ATR. This filters out dead, noise-only windows where there's simply nothing to trade. Now the entries. For a long setup, the most recent closed bar must be bullish. Its low must pierce down into or through the lower third line, but its close must recover back above that line, a rejection of the lower third as support. The close also has to remain below the center line, so there's still room to run. When all of that lines up, the strategy places a buy, sets the take profit at the center line, and puts the stop just below the signal bar's low, cushioned by a fraction of the ATR. The short setup is a mirror image. The bar must be bearish, its high must pierce into or through the upper third line, and its close must fall back below that line while staying above the center. The strategy then places a sell, targets the center line, and sets the stop just above the signal bar's high. Finally, every setup must clear a minimum reward to risk check, and once a trade travels halfway to its target, the stop is pulled to break even to protect the position. Let's look at the actual MetaQuotes language code that runs inside MetaTrader 5. At the top, you can see the input parameters. Lookback sets how many bars build the Tirone range, 40 by default. RangeThreshold is the ranging filter, set to 0.55. Min-range ATR requires the range to be at least 4 ATR units wide. ATR period and ATR stop multiple control the volatility measurement and the stop buffer. Min-reward risk rejects any setup whose reward to risk falls below 0.7. Break-even frac decides when the stop moves to break-even, and max spread points blocks entries when the spread is too wide. Now look at the long block. The code checks three conditions together. The bar is bullish, its low is at or below the bottom line, and its close is back above the bottom line but still below the center. When all three are true, it sets the stop just below the bar's low minus the stop distance, sets the take profit at the center line, confirms the reward to risk passes, and calls trade.buy with those stop and take profit values. The short block is the exact mirror. The bar must be bearish, it's high at or above the top line, and it's close back below the top line, but still above the center. It then sets the stop just above the bar's high plus the stop distance, targets the center line, checks the reward to risk, and calls trade.sell. Both sides share the same idea. Fade the rejected outer third and aim for the middle, with a tight structural stop on the other side of the extreme. Let's bring this to life on a chart. What you're looking at is an illustrative euro-dollar market moving sideways in a balanced range, with the three Tirone levels drawn across it. The upper third line, our resistance level, sits at 1.0867. The center line, the fair value magnet, sits at 1.0850. And the lower third line, our support level, sits at 1.0833. Watch how price behaves between these lines. In the opening candles, price is hovering just around the center line, drifting gently. Because the market has gone nowhere on balance, the drift ratio filter sees a calm, balanced range, exactly the condition this strategy waits for. Now watch the second and third candles as price slides lower, pressing down toward the lower third at 1.0833. Here's the first setup. On this candle, the low pushes down into and slightly through the lower third line. That's price probing support. But by the time the candle closes, buyers have stepped back in and pulled the close back up above the lower third. Crucially, that close is still below the center line, which means there's room to run toward the middle. The bar is bullish, support has been rejected, and every condition lines up. That's where the buy entry marker appears. The strategy places its stop just below the signal bar's low, cushioned by a fraction of the average true range, and it sets the take profit right at the center line. Now follow the next few candles. Price lifts off the lower third and climbs steadily back toward the middle of the range. Each candle carries it a little higher, and as price reaches the center line at 1.0850, the take profit is met. That's the complete long trade. Fade the rejected support, ride the return to fair value, and exit at the center. Notice too that once price traveled halfway to the center, the stop would have been pulled up to break even, protecting the position along the way. But the story isn't over. Price doesn't stop at the center. It keeps pushing higher, up through the middle of the range and toward the upper third. Watch these next candles climb toward the resistance level at 1.0867. This is where the strategy starts looking for the mirror image setup on the sell side. Here it comes. On this candle, the high pierces up into and through the upper third line. Price is testing resistance. But by the close, sellers have taken control and forced the close back down below the upper third. That close is still above the center line. So once again there's room to travel back toward the middle. The bar is bearish, resistance has been rejected, and the short conditions are satisfied. That's where the sell entry marker appears. The strategy sets its stop just above the signal bar's high, again cushioned by the average true range, and it targets the center line. Now watch price roll over. Candle by candle, it drifts back down from the upper third toward the middle of the range. As price returns to the center line at 1.0850, the take profit is met and the short trade is complete. Same logic, opposite direction. Fade the rejected resistance and aim for fair value. Step back and you can see the rhythm. In a balanced range, price keeps stretching toward the outer thirds, getting rejected, and snapping back to the center. The strategy simply waits for those rejections, joins the return move, and keeps its stop tight on the far side of the extreme. And because it only acts when the drift filter confirms a genuine range, it aims to sidestep the strong trends that would otherwise run straight through these levels. And that brings us to the end of our breakdown of the Tirone Level Range Reversion Expert Advisor. Today we explored how the Tirone levels divide a range into thirds, how the strategy uses a drift filter to confirm a balanced market, how it fades the outer thirds back toward the center, and how it manages risk with a tight structural stop and a break-even lock. Remember, everything in this video is for educational purposes only and is not financial advice, a recommendation, or a solicitation to trade. Trading carries real risk, and losses do occur. If you found this analysis helpful, please like the video, leave a comment with the strategy you'd like us to cover next, and subscribe for more MetaTrader 5 strategy breakdowns. You can learn more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.